Okay, welcome to one of the Referandium's Learning public session. Today we're going to talk about a project that was launched on Pump.fun more than a year and a half ago called Arc. And the reason why I picked up this example is there's currently a hackathon going on, and there are a number of projects that fit to the same narrative that Arc.fun has achieved more than a year ago. So, had Pump team have done a hackathon a year and a half ago, this project would probably have footed the right criteria. Um, Now, the narrative that we're looking at is agentic AI. So there are a number of projects that are already running, which have created their own stores. And the key differentiator here is if you are working with code-based robots, they need to transact with each other. And because they're not real persons, there's no way they can open up a bank account. So most likely any value transactions between bots or between a bot and its user will be through crypto. So Arc.fun, which came after Pump.fun, is one of those projects. So this was a tweet that I shared from a Referandium Twitter account in response to a tweet that was shared by Nala. And the person, who happens to be a lady, but you never know, says, "Stop acting like Pump Fun is still alive. No one is buying new memes. Volume is completely dead. The meme meta is cooked. Just wait for the next trend." Well, that's a justifiable claim. Now, the reason why we tackle a response to this is uh, maybe Pump.fun needs to review its product market fit because you are looking at live streams, which we are doing right now. Only a few people attend. So you don't get enough eyeballs, even if you are providing genuine, authentic content. So maybe that's what Pump.fun should do. But let's come back to our topic here, which is Arc. Now, what happened was Arc popped despite general crypto negative price sentiment and downturn. So Bitcoin was down, Ethereum was down, Solana, everything, all measures were down, and Arc was pumping pretty heavily. So what happens is in these kind of instances, you need to analyze what's going on, and you need to also look at how this project has come to life, how much did they raise from VCs or whatever. But uh, luckily, we have AI tools which can summarize this. So what I'll do is I'll actually take you to a conversation that we did on Arc.fun. And we start with a simple question first. And that is, what's Arc.fun? How did they launch their token, build a community, and raise funds? So AI Rig Complex Arc is a token ticker. So if you look at the highlights here, it's portable AI agents built on Solana using Rust language, which is fine. But the key takeaways here is they're actually doing a real world application by integrating credit card payments through Stripe. They have a store, so that's called Rhizome, an agentic app store for collaboration. Mind you, when they raised it, they also attracted a lot of open source community to build on their projects or help them build. And then they have created a token launchpad built on Meteora. So they are getting ramped up on Pump.fun, but they're actually trying to create a whole new domain outside of Pump.fun. So this is a key thing. So you do see what they have done during this period, which is pretty much like building public, right? So the hackathon, which at the moment Pump.fun is requesting from all contestants, Arc has done it all. Anyway, They did a fair launch, December 2024. They reached a significant, they graduated very quickly, a significant market cap, but then it collapsed. So we need to look at what happened. But another key takeaway is they did not raise any funds from VCs. So it was purely organic, crowdfunded, which is good, which is good. So this is also another thing that we are observing right now with respect to launches from any platform whatsoever. And you do not rely too much on VC funding anymore. If you have enough community coming to you, you're all good. You're all good. So that is one of the key takeaways. Now, then we delve into what is the Rhizome App Store, because the biggest earners on two mobile platforms, the App Store on iOS and the Google Play Store. Now there are blockchain based or pure play AI based storefronts that are competing with traditional distribution channels. So certainly Arc could have built a mobile app, put it on both App Store and Android, Google Play, and sell their products directly from there by paying their Apple tax and Google tax, of course. But here, they don't. Why should they? Because they are a crypto native application. So they simply build their own store and they say, come and buy it from my store using, guess what? Arc token. So this clearly differentiates the Arc project from the rest of the meme crowd on Pump.fun because it's pure utility. All right. So that is basically how this store thing came in. You can go through these things yourself. So it's basically lists developers and monetizes AI agents and services. It has benefited a lot from Anthropic's model context protocol, the Rhizome canvas. Anyway, you can go through them. Sometimes you see fancy stuff like Graph, Agent Tank, Fabelis, Secure Data. I mean, these are just you need to be careful whether they're just putting too much stuff in there that's not realistic or trying to make it so polishy that it looks nice. But we're going to look at a couple of things with respect to trading decisions because referendum's whole development is based on a financial model. So the rewards that are going to be distributed to those who prescribe policies and predict them right are going to be coming from passive yield generation strategies on DeFi. So, for this reason, we sometimes take positions on these fancy, shiny looking meme coins, and ARC is one of them. But when you see sudden movements like this, you also need to be careful about whether these are speculative in nature. So, it's why you next ask this question to your AI tool, large language model tool. You first note that there's an unusual price action in ARC and just want to find out when all the measures like BTC, ETH, and SOL is collapsing, why is ARC pumping? Okay. So the good thing about these tools is it actually searches all social media and finds out what is happening. And then you ask the tool to give you a verdict, whether it is speculative in nature or organic, right? So that's the key question we want to find out. Because if it's organic, and by organic I mean that they have the Rhizome store there, if real users are using these agentic AI tools, paying for them on Arc token, that's organic. But if it's not, then all this price is speculative in nature. Anyway, so that reports what you're saying. It just confirms that yes, it is certainly pumping. And then you see this comment here, which is no credible evidence supports this as the main driver. Okay, because we specifically ask, is anyone buying from the Rhizome store? Are they paying it with ARC tokens? Because if they are buying ARC tokens from any outlet, you don't see it in Binance, but certainly on Gate, KuCoin, and let alone the liquidity pool that it was generated on Radium, I guess. You can buy it from there. Okay, so you see a couple of integrations that they have done, tutorials and partners. But another red flag is no recent social mentions news on chain activity highlights of massive rise on payments, creating a sustained buy pressure on ARC. Interesting. Then it checks all the Arc.fun rise on AI, no visible revenue volume. If it's utility driven, you would expect on chain evidence, but again, there's nothing. All right. Now, the verdict comes. It says this fits classic crypto dynamic in majors dump. All right. So it's speculative in nature. Um, you go through them and you see high relative volume, like there's a lot of volume happening on the token. You look at the social Twitter, crypto Twitter chit chat, find out what's going on. No widespread rhizome is printing arc bias narrative, nothing in support of that. And historical pattern in bearish macro phases, speculative narrative plays. So bottom line, this looks overwhelmingly speculative. So when you find this out, what would you normally do if you are a hedge fund manager? Because at the end of the day, Referandium is the whole revenue generation engine is a hedge fund. So it's a digital asset hedge fund. So you need to take positions and make money. You would short this, right? So we are going to analyze whether it's primed for shorting. We do ask what is cooking, and then it says yes, it's ripping. Social media summary. Then you look at whether there's any whale activity. If there are any whale activity, what size are they? And currently, when they actually say whale alerts, have said like a pump whale scooped X amount. See, these are tiny amounts, $8,800, nothing at 98 million market cap. Scanner bots, degen posting, yeah. So this is typical narrative shields. It's a low cap AI play, real execution, not fake AI. So you do actually see those proponents of it who are shilling this. But you then look at official Arc.fun Twitter, and it's completely silent since early February. So for the past month, nothing. And almost zero recent mentions on sales volume and stuff on the Rhizome specific chit chat. All right. So speculative trader FOMO AI narrative rotation. So it's very typical play. You can see it in the charts. I mean, let's look at daily. I normally look at weekly, but let's look at daily ones. You've seen how it pumped during this period, and now we see the dump, and we're going to analyze what happened in there, and we'll also share some of the strategies that we've implemented there. So you would have an overview of how we handle things at the background. So let's go back to our AI narrative thing. It looks at various outlets like Bing, CoinMarketCap, what's cooking, speculative narrative, momentum trading, blah, blah, blah. And then we check the whale buying and then says these are small, so confirms that. And then another key thing that popped up was a crypto personality, anonymous, Zach XBT, put up a tweet saying that there is some insider trading action going on. And Pump.fun was one of the candidates. You then kind of think, would some insiders be pumping the ARC token with some knowledge of whatever? Anyway, that turned out to be a completely different platform rather than Pump. But the first thing that, honestly, in all honesty, that came to my mind was it would be Pump.fun. But Pump.fun was not high up on the list. It was, for a long time, Meteora, believe it or not. Anyway, could Pump.fun founders or Inner Circle be the ones speculating on ARC? Yeah, we've asked this question. It says, yeah, it's technically possible. Actually likely or supported by evidence? No, not even close. And the reason why I'm saying that is there are thousands of other coins that insiders could speculate on, and there are bots there as well. So basically, they find, well, the AI tool, unless it's hallucinating, is not finding any credible evidence of anything like that. All right. Then you ask some technical analysis questions. Now, this is another good thing. Now, most of the first comers into any trading space, be it crypto or penny stocks, real stocks, commodities, or whatever, they lack technical analysis knowledge. And it takes many years to acquire, mind you. But these days, with the LLM tools, if you have some basic information about what technical analysis is, you don't need 2.5 years, 3 years of trading experience. You can ask technical analysis questions directly to the LLM tool. So it will actually give you a nice summary. Even things that you may have missed out. You can probably mention some of them, like 50-day exponential moving average, 50-day simple moving average, RSI, which is relative strength index, MACD, whatever you know, you can ask that. And then the LLM tool, I'm using Grok, just gives you technical analysis on Arc. And then you can see various recommendations here based on those signals. So it says strong buy, price something above, strong buy, and then neutral on RSI, bullish on histogram expanding, buy, sell on another indicator, neutral. So anyway, it will tell you conflicting stories. So you need to make an informed judgment on how you're going to handle this, right? Anyway, just make it a habit for any crypto related stuff or any other stuff. Go and ask an LLM tool to do the technical analysis for you. Okay, and it will summarize the technical picture, and then you ask a very specific question: should I open a short position on Arc? And it says yes. A tactical small size short makes sense. And believe it or not, we've actually did. We've actually did, and that's why we captured all this down action when it was falling. We actually did quite well from this, and I can show you from real data. I mean, you don't need to just believe something that is said, but here you have all the shorts that's been happening, and we actually started shorting this. Probably at a lower price point initially, but with small amounts. You always take a nibble of like 50, $100 worth first. So we first shorted at 0.059, and then it went up. We shorted again, went up, we shorted again, and we added to it. So we accumulated our shorts. And then we booked in some profits, like went from 10.12 to 10.010. And you need to be careful. Like these are not large profits, like probably like $20 on $100. Percentage wise, they're great. But the reason why I need to be careful and take profits is if you look at the weekly graph, for instance, let's change it to weekly so you could see the big picture. Now, we are currently pumping here, but this token has risen all the way up here. So if there's a real organic growth, non-speculative growth, or even if it's speculative, the market could remain irrational for longer than you may remain liquid. Okay, so when you consider taking profits early on, you always need to make an assessment of how far it could go, and if it pumps all the way up, then your losses will be limitless. So that's why we took some short positions in there. But the other thing is, these are trade related decisions. You can also do your own digital asset hedge fund related strategies in there. And these are things like you take a borrowing position on a centralized platform. And at the moment, the carry cost of ARC is 4.13, but it was quite low actually, around 1.7 to 2.2 something. And these are all fine. You can take those as well. But we also did another thing. We open up a pool. So what I'll do is I'll look at historical positions on Arc Sol, for instance. So let me show you what we've done. Here, we created a position and we put some borrowed Arc in it and committed 13 Sol. And when Arc ripped to the above, we ended up leaving with zero arc in the pool and everything converted to soul, which is fine because we have quadrupled our soul position in there. And then we also booked some commissions in it. Now, what you have now is you, after the pool runs out of arc, then your decentralized lending or centralized lending platform position is naked. Okay, so you have a naked position on Arc. That's why you also need to be careful before opening any new shorts on it, on your position size, what percentage it takes. But anyway, it turned out to be all right for us because it collapsed. All right, so we booked in. So let's go to daily. As soon as this turned, we actually closed this. So let me go back and share what was our final closes in there, so that you understand we are not bullshitting anyone. Here it is. We close it at 0.38. All right. So these are the close positions. So we booked a nice $1,500 to $2,000 from that short, as well as this gain here in Sol. Okay. So this is pretty much what we need to look into when a new narrative is shaping. Now, I'm wondering with the hackathon that is going on, what will be the Pump.fun team's narrative follow? Because so far, I'm seeing that, yeah, they're doing a little bit of the generative AI, agentic AI stuff. But I'll continue just with respect to after the whole dump is over. You then can also create with at a low carry cost a standard liquidity pool on Radium, and we opened that actually at a low point, and I'm going to share that too. And the reason why we do that is because the API APR is quite high, like 432%. So we actually put exactly the same amount of Sol that we initially put on the Meteora pool on a standard thing with 35,000. And that way, we didn't short Arc, we didn't borrow Arc because it's right at the bottom. I mean, why would you short Arc? So what we actually did is we converted 13 Sol, which we initially put to Arc. So it was a swap from sold to Arc, meaning we actually purchased the token and then added another 13 in there. So overall, we have a 2.2 thousand position in there. This is to observe. With these new narrative tokens, it doesn't matter how big the market cap is. You need to take small positions, guys. Okay, all right. So whatever that comes from these pools, they will be distributed to referendum participants because that's what we do now. If you follow up, there's another thing that I want to show you. You can ask these questions about the risks of liquidity pools. It'll probably just tell you what we already know, like impermanent loss risks and blah blah blah. So feel free to experiment with them. But what I also did is I also asked the LLM tool another token which is in the same narrative play, and that's virtual. Now, virtual is interesting. It's an Ethereum virtual machine token, Ethereum related one. I think you can trade it on Base and a couple of layer twos. Now, the reason why we're asking that is it also has a store and it also sells their agentic AI. And here, it's done the technical analysis and whatever. And the key thing was the technical picture said strong fundamentals or whatever. But unlike Arc, Virtual's analysis was strong evidence of organic revenue driven demand, unlike Arc Rhizome. So this is very key, guys. So virtual price popped up as well. I mean, you can see it on this graph. Let's check virtual on a daily. All right. So it popped up. around the same days that Arc was pumping, Virtual was pumping as well. So it was a narrative play on both chains, Solana and Ethereum, respectively. And it did correct a little bit, but as you can see, it's still quite high up there, quite high up there. And at Referandium, we also had a position on Virtual, and it was a Virtual with position, which went out of range, luckily, because we've actually converted some of our ETH to Virtual when Virtual was low, and then we put it on a pool. The thing is, we had some technical problems with Uniswap in closing the position, and I actually took it public. I said that how come Uniswap base protocol doesn't allow you to close the position? All right. Now, this is quite important because Uniswap is like the OG of DEXs. Okay, they've been around for a long time tested and everything. Now, once the price goes out of range, you can neither claim your rewards nor close the position. And the reason it gives you is that you do not have enough gas token, which is ETH in their case. No, we do. We have $21 worth of ETH. Base protocol transaction fees are like millicents, so it's certainly more than enough. Anyway, I complained about it, and I did actually tackle both Hayden Adams, the founder of Uniswap, and also Brian Armstrong of Coinbase, because base protocol belongs to them. I want them to go to the bottom of this. Is it blockchain related? Or is it Uniswap related, the protocol related? I mean, we had these problems ongoing for a long time, no more than 2, 3 months. Okay. And usually they say, oh, the subgraph is not syncing. So what you're seeing there is not the same. Because at some stage I lost all my positions. I couldn't see any of my positions to close them or to rebalance them. And for a digital asset hedge fund, not being able to close a position and get your funds back to your self custody wallet is absolutely critical, because sometimes you have borrowed positions on them. And in the case here, we didn't have any borrowed position on Virtual, luckily. So we didn't have any naked short, because we would have been naked short, like in the Arc case. But we didn't open a short position there. But we borrowed ETH. We borrowed ETH, converted half of it to Virtual, and then put it on a pool, a 2020 pool, if I recall, and then let it run. So what happened is the Virtual got sold. Fine, we booked the capital gain, but it was very dramatic that we couldn't take the funds away, because I would have just closed my ETH position on my borrowed place a day or two before. It got resolved, thankfully. You need to open up a ticket. But then these begs questions like, is everything really decentralized? No, no. So DeFi is still a nascent field. Okay, I don't want to make this any longer. We will repeat these learning public sessions with you. We might actually start teaching public sessions later if you want to learn DeFi and other stuff. But all right, so that's all for today. See you next time. Have a good day.